Okay, welcome to Weekly Roundup. It is December 15th. I'm Scott, that's Ben.
Hello.
Oh, looks great behind you. You got the Canadian flag flapping.
Sun setting.
Patriotic for this nice weekend.
4:50
Coming up
on a Friday.
I know, right? It's the office is quite quiet. I feel like I haven't been on the show here for a few weeks because I haven't. Traveling, Montreal, business stuff, it's exciting.
Mm-hmm.
Yeah, so I don't know. This seems like it's been kind of a slow news cycle. Today anyway. What's give us the update. What happened this past week?
Anything you want to add from your adventure to Montreal? Scott was in the head office meeting with some people last week. Anything you want to throw in before I jump into the week?
No, nothing appropriate for this show.
Fair enough.
Is there something I'm forgetting?
No.
Okay.
No.
Well then, no.
Yeah. No. Yeah, I'd say news cyclically wise, quiet certainly today. From a market perspective, though, we had central bank in the U.S. on Wednesday, and that was Material Day. Some say that it's going to go down in history. Chairman Powell said what he did. People analyze what he said and how he changed it, how he changed his speech and what's going on. But effectively, the market says he signaled 3 rate cuts at a minimum next year, starting in March. So the market kind of took that as that's what's going to happen. And initially, we had a pretty good rally out of growthy things and bonds and to crypto. The thing that has really followed through with that has been bonds have rallied hard. So as I look across the portfolio, what's been doing best, I've been putting up that chart about what happens when interest rates fall. And as we sit here today, we got the US 30-year sitting at 4%. We got the Canadian 30-year setting below 3% here. And so any of that longer duration holdings that we have, XLB or ZFL, like any of those longer duration ETFs, have had a big rip this month. And so bonds have done quite well, and obviously I'm happy to see that. Lots of that's with the view of Chair Powell's changed his tune and direction.
All right. Well, that's that's positive news this time of year. Fairly material news. This time of year, so that's great.
Yeah.
All right. I know we had a super busy day here in the office downtown. Actually, we forgot to mention my new office here. We got a new location. I'm literally right across the hall from Ben. He's got the nicer window, but I'm coming for his too. I'm coming for his office next. So.
Congratulations, though. That's exciting.
Thank you. Very exciting. Yeah, we're gonna have to work on the stock artwork behind me and maybe the lighting as well in here, but we'll get there. Okay. Yeah, so all that being said, busy day today, so I don't know how many probably just pulled a couple slides for today.
Just let me know if you can see it there when you get a chance.
I'll put it up here for you.
Yeah, I think so. You can see the content though?
I can, yeah.
Yeah, okay, perfect.
In there, live. There you go.
Perfect. Yeah, good. Awesome. Yeah, so as Scott mentioned, I mean, we can mention it here. It's not a secret, been in the process of trying to hire an associate. And so I had a bunch of great meetings today. Hopefully we get a good resolution out of that. To be decided on future. But so I gave an update just on a few things. What we often talk about, Scott, is what happened this week. So, I think one of the things that I tried to hit the high points, but almost every week there's a massive amount of data that comes out. And Wednesday, Thursday, I'd say were the biggest points, which is the FOMC, which I just mentioned, we talked about. It's also the ECB. And so that's the European Central Bank. Well, they didn't cut rates. The probabilities of a rate cut coming soon in Europe is starting to move up the list quite quickly. And so while you've seen bond yields fall significantly and bond prices go up in North America, same has applied in Europe, and Germany has been one of the better performing bond markets, with the view that the economy slowed there. And so these were kind of the main things that happened this week from an economic data perspective in Canada, the U.S. So I just thought I'd put up there's lots of things always on the go. The other, assuming that we switch slides there and that came across. Yeah, it looks. Oops.
Yep.
Yeah, we're good.
We're good.
Okay, perfect. Yep. So just when I look at, as you know, I start with the view of what's happening in the economy, but then also flows and sentiment play quite a significant role as to what to do next. And so it's a great slide and chart just around where we are, where we were. And so as I look at these indicators, we're starting to lean towards that optimism or extreme optimism. And you know, you look across all of these things, momentum and volatility. So, you know, as you start to think about it, momentum is actually a little bit worse than last week. Not good. Volatility is a little bit lighter than last week, so also not good. And so as you think about this, stocks seem like they've stalled out a little bit here. So I'd be thinking of, you know, potentially maybe taking some profits in some of the growthier areas. But as I mentioned, bonds have performed well. So this would be the sentiment gauge that you'd think about. What do we do? Do we toggle up or toggle down right now? So two more quick ones, and then we can talk about what's to come next week. So, you know, volatility. So volatility is one where where I haven't spoken about in a while, but we've gone through multiple periods of volatility spikes in the last number of years. But this is a view from 18 to today. And so as we sit here, we have a slowing economy, we have slowing inflation, yet we have pretty quiet markets. And so volatility is coming back down to, we'll say, December of 2019 levels. And so for anyone that remembers December 2019, that was just the early days of COVID. And so we saw a massive vol spike out of there. So as volatility gets lower and lower, yet some of the economic data points are getting worse, it starts to make me think about, what do we do here? Is there anything that we need to do to adjust the portfolios? Do we need to look at reducing risk in certain areas? So this would be something that grabs my attention when I see volatility continuing to fall at the level that it has this year. And so as we talk about bonds, so the starting point really matters. And so when we think about this and we think about bonds, this slide actually references bonds versus GIC. So that's an interesting one. I think a decent mix of both of them is okay. But when you think about how bonds perform when we reach peak rates, which it looks like we did hit peak rates this year, tends to be how bonds have performed on this backdrop and 1 year following. So the average return over this period of time has been 8.4%. That's just for the bond component of portfolio. So really good risk reward opportunities here, and certainly something to think about when I'm looking at adding anything into your holdings. So that's it for the charts of the day today, and certainly you know, we can talk a little bit about Gensler and SEC and crypto, because I think that's also been on the news for people that have been following. But that's it on the big macro scope.
All right, great. Well, what about what's Costco up to with selling all their gold bars? You mentioned that in the daily today. What's up with that?
Yeah, well, definitely that was a surprise, but it shows, you know, people are starting to pay attention to these things, starting to worry potentially about the US dollar, and they're buying gold as a store of value. And so we've seen gold bounce up through 2000 multiple times here in the past couple of weeks, and briefly touched its all-time high about a week and a half ago. So it's interesting to see people generally, it appears, are concerned about what the US dollar is going to be worth. And so, you know, money's been flowing into gold at the individual level. But as if you followed some of my dailies, you'll have seen as well at the institutional level, because majority of the global central banks have been buying gold to add to their reserves as well. So that was interesting to see individuals start to do that too.
Definitely.
Yeah.
Okay, and what there was something else that you mentioned before that too.
Yeah, so we've been talking about this spot Bitcoin ETF now for a
Oh, yeah,
couple of
right.
years. Yeah. And Gensler gave another update again today. You know, there's looks like there's a window in January where they could potentially approve one of them. Looks like there's 12 Bitcoin ETFs in the queue waiting for a yay or nay. So you know, seem to think that this is likely to happen sometime early next year. Well, you know, you look on the outside, is this a material event? I mean, the only way it is because the BlackRocks and the Vanguards and the Fidelities of the world will then add it to model portfolios, and flows will start to go in there. So while it doesn't change anything to the structure of it, it could be a material tailwind for fund flows, and so we'll certainly watch that and pay attention to see what the potential impacts are for the. But Gensler continues to grab headlines with his talk about what's going on with this.
Gotcha.
Yeah.
Okay. Anything else before we move on with our weekend?
I think probably maybe one more quick thing is just it seems like the liquidity's come back to the market a little bit. We saw Rogers sell their position in Cogeco. I think we were hoping that it was to buy a baseball player, but that didn't work out for the Blue Jays. And we saw Pembina do a big raise because they're acquiring a company, so they raised 1.5 billion this week, and the market took that quite well. And Boardwalk REIT, it's the first time a REIT's come in a long time, and that was well accepted to the market as well. So interesting to see liquidities coming back on the corporate side too.
No, for sure. Yeah. Okay, well, that's it. We will. We've got the recordings figured out, so if you're watching this on the recording, that's why. You get access to our YouTube channel again, so that's good. So those will go out on Monday, and we'll see you then.
Perfect.
Next
Sounds
week.
good. Have a
Okay.
good weekend.
Bye.
Thanks.
Bye.
Bye.